Hello everybody, this is Lars Fontinen from whentotrade.com. I want to give you a short review for the system I published in my book in chapter 7 with a mechanical trading system on a daily time frame. So it was published in the year of 2010. Now we have the middle of 2012, and what we can do now is we can have an out-of-sample review of this system for the year of 2011 up to now, and let's have a look how it performed. Before we go to the actual results, I will give you a short recap or introduction to the system, because it's based on energy cycles, and the special idea of the system is that it will give a turning point in the future 8 years ahead of time. I think this is a very special technique which you will learn in this chapter. So what is it about? It's a combination of, let's say, two worlds. It's about a cycle analysis, and we use an additional cycle filter or pattern which comes from planetary bodies with additional cycles. So what we do is we have dominant cycle analysis at work. We do this with a special energy pattern which comes from cycles in the universe, and just use the very basic simple swing trading forecasting technique, which will give us the future turning points in respect to time and direction 8 years ahead of time. So all trade signals for the year of 2011 are generated based on the year 2003 and before. So I think this is a very important fact to keep in mind, and it's a little bit outstanding and special, I think, for a trading system doing it like this. So okay, what are the hidden cycles behind? Because I talk a lot about cycles and hidden cycles. This system is based on, let's say, a 3D motion view on the cycles which are working in the universe, mainly based on the Earth, the Moon and the Sun, and the relationship and the cyclical motion of these three planets. So the difference is a little bit that these cycles are not secret or not special anymore. You just have to know which cycles you use. But however, on the normal planetary energy view on the ephemeris, which is commonly used by researchers on astrological cycles for financial markets, these cycles will not show up. So we have to keep in mind some old techniques regarding cycles in the universe, and not focus only on the mathematics which is presented by most astronomical financial cycle tools. So this is, I think, a little bit the secret behind, just to go back to basic rules. Okay. So this is one point to keep in mind where the cycles are based off, and the second point is let's review the assumptions that are lying, or that are the fundament of this mechanical trading system. So first of all, this is commonly known: financial markets are driven by emotions. But if we go forward, or my additional assumptions are based on the fact that the emotions are influenced by external energy forces. So, for example, gravitation, geomagnetism play a very important role in our daily life and influence our daily behavior and also the emotions. There's a lot of medical research out there which proves this relationship. So the next point 3 is that these external energy forces are always in cyclical motion. So due to the fact that the universe is in a cyclical state, so everything rotates around the other, so we have cyclical motions of these external energy forces here. And point 4, as a result of these repeating external forces, the movement of financial markets is just a repetition of cycles that have also been active in the past. Because if everything is in cyclical motion, everything will repeat over time. So, and point 5 now, if we know this hidden rhythm of the repetition, we are able to measure which cycles have been active during the different phases of the external energies with dominant cycle analysis. So we can apply our dominant cycle analysis if we know how to do it. So, and if we can do it, the last point is just simply point 6. We can then use this information to predict the cycles that will be active again in the future when the universe returns to the same cyclical energy state. So as stated above, the universe will return to the same energy state because it's in cyclical motion. So and if we know the dominant cycles for the universe in different states, we know when they will repeat in the future. So this is just the background why we can calculate trading days, or we know the dominant cycles that will be active 8 years ahead of time, because we know how to do it. I will not explain why it's 8 years and why you with this period. This will be explained in depth in the book. So just to give you an idea about this, we use this cycle analysis. So the trading signals for 1 year in review for this example here, 1995. We use the time period of 1957 to 1987 for cyclical analysis. So the last 8 years from 1987 to 1995 are not taken into account. So the complete trading system, or the trade dates, are now 8 years in advance and are not changed at all. So they are fixed. It doesn't matter what the market did during the last 7 years. The trade dates are fixed for the year of interest. So the trade rates of 1995 have been fixed after 1987 came in, and it doesn't matter what the market did after these 7 years. So in the end, I will show you how these performs and how the forecast will be generated. But another thing that is important, it's 100% pure mechanical. So there's no objective judgment into the system. It's a pure mechanical analysis and forecasting technique. Okay, so let's see how this, in the end, simple idea performed over the last 15 years. What you see on the chart, the black line is just the Dow Jones index up to 2010, the publication of this system, and the blue line is just the equity curve based on the Dow Jones index, just switching from long to short trades based on the trade signals. So it's a simple swing trading of the forecasted turning points from the system, and we are 100% always in the market with just switching between long and short. And this is based, all trade dates are calculated the 8 years ahead of time. The trades are executed blindly, so no trade signal has been skipped based on whatever actual situation. So we just executed every long and short trade. We did not pay attention to the market at all, what was happening during this year. So just blindly executing the signals which have been calculated 8 years ahead of time. And what you see, if you see this type of equity curve, it's an linear constant upsloping equity curve, which is nearly an ideal equity curve. If you see this upsloping line from the equity curve. So okay, this is the research and the backtest behind it. It's all explained in the chapter 7 technique. You can see some statistics here. So it's a little bit interesting. Over this period of 15 years, you have a very good distribution of long and short profit here. So about 50% of profit comes from long trades and 50% from short trades. So it's a very good distribution of the profit here. So yeah, it's just trading one contract just to simulate the DOT behavior. We have an accuracy of 62%, win-loss ratio of 1.2, and a profit factor of 2. These are very good system statistics with an average of 21 trades per year. So 2 to 3 trades per month, which is a very good number for day trading and swing trading. It's not over trading. You will change just about not even one trade a week, so that's fairly easy to execute the signal, and with no trade cost at all. It just another statistic to mention here. Here you see each year from the period of 1995 up to 2010, with the Dow Jones index, the performance of the Dow Joe, the performance just as a comparison, Warren Buffett's company, and here, and this is interesting, the numbers for these some simple swing trading cycle system. So here's the yearly profit, and what you can see here, there's only 1 year where this system generated a loss. All other years are moving up. So even the Dow Jones had 1, 2, 3, 4, 5 negative years. The cycle swing trading system is even more smooth in the upsloping equity curve. So in total, you have a very stable trade history, about 20 trades a year, and a very stable win-loss ratio here over the years and year review. So within component annual growth rate, which is a good comparison index of around 30%, which is quite above the standard of the dojo or the Warren Buffett. So very good statistics over the period of the last 15 years. And just to have a little bit robustness test about the equity curve. On the left side here, you see just the compressed equity curve of these 15 years during this 15 years period, which 100% swing trading. I already explained it. We see these upsloping straight line moving up. And this is generated by, let's say around 20 trade signals per year, which have been generated 8 years ahead of time based on cycles of the past. It's just a comparison for random cyclic signals with a similar distribution. These are equity curves where a random number generator generated around 20 trade signals also per year, but just randomly generated. So similar distribution means the distance between the trades is nearly equal, like here, but just the 20 trades per year have been generated. 20 trades per month have been 20 trades per year, sorry, have been generated randomly. And you see the result of these randomly generated trade dates with a similar distribution. The equity curve will look like this, and this is what you would expect for random trade signals here, so no profitable trade system at all. So, but it's the same statistic of signals like you see here. So I think this is more than enough proof that there is something behind these cyclical signals, because you will not be able to generate such upsloping equity curve if there's nothing behind. Okay, so I even expanded the backtest to 30 years. The complete same system, no back optimizing at all. So the period of 1980 to 2010, complete period of 30 years. Here you see the equity curve over the period of 30 years. This is a log scale here. So, and if you see for over this long period, again an upsloping line on the log scale for the equity curve. This is again nearly the ideal trading system, and with nearly the same statistics here. You have an accuracy about 60%, profit factor 1.8, win-loss ratio 1.3, annual return component annual growth rate around 20%. This has just added position sizing, which means that the technical condition is taken into account if a large or just a small position is traded. The trade dates or trade signals are just the same based 8 years ahead of time calculation. Just the position size is then adjusted based on the current technical situation on the market here. So even if you expand the period to 30 years, you will see this great history here. Okay, everything about this is outlined in the chapter. What I want to review with you today is how did it perform in the first, let's say for the publication, official out of sample period for 2011 and 2012. Because I published all this knowledge in the year of 2010, and for sure everybody looks for the performance after the system was published. So now we can have a review on this, because 1.5 years passed since the publication, and let's do a quick review about it. So recap, this system has 30 years backtested with a pure 100% mechanical system. It's 100% in the market on the daily time frame. Trades are generated 8 years ahead of time with an average of 21 trades per year, which is a very good trade statistic for fund management. And keep in mind, there is no system optimization and no curve fitting which has been done on this system. So it uses, in the end, it uses static cycles of the past. You just have to know how to detect them. But it's just pure noun energy cycles, not adjusted over the complete period of 30 years. So the same mechanical system is used over the period of 30 years, and there has been no back testing or curve fitting in finding these good trading results. So it's all explained from the physical point of view or the energy point of view. So on average you have 12% profit per year for simple swing trading and around 16 to 20% 10% profit per year if you just use risk-adjusted positions, but the same trade signals here. So, and now let's go to 2011-2012, and the trades for the year of 2011-2012 have been known since 2003-2004, so nothing special here. So here's the performance review I want to show you. On the left you see the year of 2011, and on the right the year of 2012 up to now. So this is the actual period of the last 1.5 years, just for today, or from today, after the system was published in 2010. So what you see here is the Dow Jones Index, and just to visualize it, here are the trade signals just highlighted on the chart by just short, the blue are long trades, short trades, long, short, here how this performed. And yeah, just a quick view here, you can see, okay, short, long, you see how good the system predicted the tops in the market here just to the day. And again, I cannot often repeat it again. All these trade dates for these short trades have been produced 8 years ahead of time. So this was not a real-time calculation just after the price came in. This trade date have been fixed for 8 years. So even the lows, yeah, have been calculated in a good manner here. So and if you see these forecasted turning points here, and in the end the trading gave us a total profit of 19.8% for the year of 2011, which means the system traded 2,300 Dow Jones Index points. This is so, and compared to the start of the Dow Jones for the year, which is around 11,000 points. If you trade over 2,000 points with the system, you have just a profit of around 20%. So, so the position size is just indicated by the numbers here. So, 5 means that you get a 100% long position, and a 1 just means you just get a 20% short position in this case. So the size of the position just depends on the technical conditions. So the trade signals are based on the trade dates 8 years in advance, and if you go with a 100% position into the market, or just a small amount of your position into the market, this is the risk management for the position size based on the technical condition. So a very simple system in the end, which with every trade day just known and just executed blindly, so not optimized to current market conditions. So again, it gave you in 2011 19%, and just if you have a look, how did it perform this year up to now? You see again how nicely here the lows and just the tops have been predicted by the system, again 8 years ahead of time. So these trades have all been fixed regarding the trade date. So, and up to now the system has a profit of over 20% already for the first half of 2012. So let's just review the numbers. 2011 the Dow Jones just did a slight profit of 5% compared to this cycle systems, which executed purely mechanical trades produced 8 years in advance with a profit of 19%. And if you want a benchmark to this, you can just review the best mutual fund in 2011 has managed to gain a profit of 12%, and the best hedge fund 2011 was a bad year for hedge fund, but even the best hedge fund during the year of 2011 was only be able to produce a profit of 6%. So this cycle systems outperformed every index and every hedge fund or mutual fund out there, and it's a simple out of sample period here. So this is all just the pure execution of the system I presented in the year of 2010. And we have nearly the same numbers or even better numbers for the running year. For the first half we already have a profit of 2,880 index point, which corresponds to a profit of 22% for the year, and the Dow is only up around 2 to 3%. So big outperformance again. And I just want to just review it. I think this speaks more than thousands words or historical performance reviews. These 2 years are now the first 2 years with the out of sample results just available now. These are just simple facts. It's a simple mechanical system. I think the real value behind the systems is the knowledge which cycles do you have to take account to trade the specific year. And you're just invited to join the Cycles group. The book is available. I decided in the year of 2010 to publish this in the book, Decoding the Hidden Market Rhythm. And if you're interested to review even more, you're welcome if you like the book. So, thanks for listening.